Have you ever found yourself unsure of where the structural support and resistance levels are when looking at Bitcoin or any other price chart? You're not alone. Many traders and investors have this problem. They struggle identifying key levels and often react too late, missing profitable opportunities. In this video, we're going to focus specifically on Bitcoin, and I'm going to show you how you can see the support and resistance levels ahead of time. This is incredibly valuable information. Let's run the numbers. Looking at Bitcoin, it's currently trading at 103,916. From the 9th, we had an explosive rally up, and then across the weekend, we've basically drifted in consolidation. We had a slight breakout, but that's not had any follow through. Why is this the case? And could we have seen this ahead of time? In fact, if you go back to the 9th of May video, I show exactly where the structure was to the upside. And I also gave some insight that this was very likely to occur. For the Elite Service members, the video has been released inside the service, and all charts have been released. Let's check out the structure on Bitcoin. Now, what we do when we check out structure, we're actually looking through all of price history, marking up these lines, not by just some random methodology, but by standards, level 1 and level 2 standard certification. And here we can see the culprit. Basically, Bitcoin has been constrained by this level of overhead structural resistance. We talked about this all the way back on the 9th. The key is to replace emotional decision making when it comes to trading and investing, and replace that with data-driven strategies. These levels have been scientifically proven over many years. They are the strongest and most statistically significant support and resistance lines in existence. Even when it gets really volatile, you can maintain your emotional composure because you know where the ceilings are and where the floors are as well. There are a lot of statistical indicators out there to help you to gauge when price is breaking up, breaking down, and all over the place. But the issue is you realistically need to know where price ceilings and floors are. Here we're looking at the volume weighted average price. You can see that band there, but the problem is that VWAP actually doesn't inform you where the structure is inside the market. It couldn't clearly see at this point of time that we'd come up into 104,744 and reject. But we already talked about that in the 9th video. As a former statistics first and second year lecturer, and finance degree qualified and been inside financial markets for nearly 4 decades, what I realized is that when it comes to support and resistance, people don't do structural support or resistance. Even though they say the word structure, it's not structure at all. Structural support and resistance requires a very in-depth statistical analysis across all data points. Not just recent indicative price, which will RIP your money. Also, these specific lines are formed from level 1 and level 2 standard certification. They are called Stanfield levels or CTKS levels. The more you get these levels aggregating, the stronger is either the buy interest if the levels are below current price, or if you've got very strong levels above current price, there's a lot of sellers and therefore liquidity there. Now, looking into Bitcoin, where could we go, for example, in the next week? One thing that we need to look at is where the structure resides inside the market. There's absolutely no question that getting above this 104,744 level is absolutely critical. There's an absence of structural overhead resistance literally all the way up to 109. That means that when we get past this level, if bullish momentum continues, we could be at 110,000 in the blink of an eye. From the other side, we have levels of structural support playing inside Bitcoin structure at the current time. So any particular downtrend is likely to be caught by fairly significant buy interest. The elite members of the service know that it's a lot more that you need to look at than just Bitcoin's price chart. All charts are intercorrelated and interconnected. Now, what does this mean? A lot of people talk about stacking probabilities. It's a statistical term. When you stack a probability, you're seeking to figure out if one specific chart is likely to go up or likely to come down or likely to consolidate. This is why we look through the cheat sheet, because the cheat sheet gives us intercorrelation, interconnection, and directional correlation between all the elements that we need to pay a lot of attention to. And these elements are available through the cheat sheet absolutely free of charge. You can download it from the homepage. The cheat sheet is comprised of 7 rows. Row 1 and row 2 measure risk. These are the really important ones to start with. If you know which direction the risk is going, you're basically answering the questions where the other components will go. Now you can see we've been focusing only on row 5, chart 1, which is Bitcoin. The structural levels are available across all of these 32 charts. You've just looked at the structural levels around recent indicative price only for Bitcoin. So we need to get a better understanding of what the potential momentum is. In order to do that, we'll look at row 1 and row 2. But first, I'm going to show you the structural levels on total. All of this structure is available inside the service. Looking at total crypto market cap, just marked up with level 1 and level 2 standard certification, we can see there's structural overhead resistance playing inside the crypto market at the current time. In fact, we're under 3 levels of structural resistance. Total crypto market cap is currently 3.27 trillion. We've come down into 1 level of structure, and that's just before a stronger level of structure. We expect price interactions with these levels of structure, which we know ahead of time. You want to read total crypto market cap and also Bitcoin structural levels as one chart. Look at them, compare them, understand how they intercorrelate and interconnect with each other. And then look at your money chart. In other words, the chart that you put money into. Now, what does this specifically mean? It means that if we get above, you can see this little flip down here, this red candle, there is a level of structure playing through here. And we always read structure to the right. We already know where the levels of structure are and also the gaps between them. If we get past this specific level right here, we could actually potentially see a revisiting of these levels. Now, why do I point to that? Let's say that you're putting money into Solana. You can see these 3 candles, those 3 red candles there, that's the area that I'm talking about. If we find that Solana gets over around that 173.20 mark, we could see that Solana could actually go for it quite significantly. But the key is, what is the structure inside Solana's chart? In order to do that, we just throw on the service indicator and we can see that Solana has a lot of underpinning structural support at the 170. It also has it just where total crypto market cap bounced. It has a positive CTKS gap, and positive CTKS gaps can get filled really quickly. And just beware that when they're filled, they can turn into negative CTKS gaps and right back into positive ones. In other words, these gaps can get filled. These are the gaps that you realistically need to know about. And where is the upward structural overhead resistance inside Solana? It's just a little bit north of that 179 area. And you can see how Solana just pushed up into that area. And we knew this structure ahead of time. In fact, we pretty much knew it from the start of the month. Another way to look at this really strong structure is to think in terms of liquidity. There is a lot of buy-side liquidity just sitting here. If Solana comes back to the 170 mark, and you can see it's slightly north of 170, but the concept is there are a lot of buyers who are going to express interest in this level, and you already know it ahead of time. This methodology cuts through the noise and allows you to see the market's true structure. You can see it from the support side and you can see it from the resistance side as well. Let's have a quick look at Doge, and when we look at Doge, which is currently trading at 23,160, we can see those particular candles, and if we get a movement above 23,400, that is really positive. But what is the structure inside Doge? That's the real critical question to answer. We can see that unlike Solana, we have a level of structural overhead resistance right smack bang on the top of that candle. You can see Solana's structure was completely different. There is no structure right there. Now, what this means is Solana, if it can break out, should perform relatively well. Why is that? It has less sell-side liquidity around these areas to push the price down. You can see how incredibly practical this is. If you want to know where smart money is buying or selling, or selling, you know it with the method. The most powerful thing about structure, you see where the sellers are going to come into the market, where the buyers are going to come into the market and support price. You can see how strong the sellers are, how strong the buyers are. It's an incredible method. It is literally the gold standard of technical analysis. And when you see positive CTKS gaps, what that means is the price can move very, very quickly. Just please be aware of these gaps. They love to get filled to the upside and also to the downside. This means that you must understand structural passes and structural failures. They're very important. Negative structural attraction and positive structural attraction are vital to understand. So therefore, we have a bit of an understanding on Doge, Solana, Bitcoin, and of course the entire crypto market, where the structure resides. That is absolutely enough to make a trading and investing decision based on that structure. But if you want to go to the professional level, you'll want to stack more and more probabilities. And if you want to become an absolute expert in markets turning and timing, you'll want to do the cheat sheet, and it's completely free from ctksmethod.org. You can download it. Understanding why one specific chart is moving relative to another is very important. We've seen a very tight directional correlation between the VIX and also gold. So when the VIX spikes up, it's likely to enhance the value of gold. When the VIX is spiking down, it's likely to decay gold. Now we know that all price action, all of these price waves are structurally bound. If you understand this, you're ahead, literally, of everyone. And that's where you need to be inside financial markets. So let's have a look at the structure on gold. And let's see where the structure is playing in at the current time. We've seen a bit of a collapse inside gold's price at the moment. This gives the likelihood to the VIX retracing and positive momentum inside the DXY, the US2, the US10, the S&P 500, the Dow futures, the Russell futures, all of the futures, and also Bitcoin and total crypto market cap. And that blue line that we can see just really faintly is confirming that as the case. But note how structure actually works. When you drop off a level of structure, you get negative structural attraction to the levels below. If they're weak and light, you can get a structural overshoot, so you need more and more levels to withhold the panic. Markets are always moving between panic, fear, and greed. But not you. You understand where structure is, and you understand intercorrelation, interconnection, structural passes, structural failures. You know how to mark up your charts with level 1 and level 2 standard certification, so you can overlay these lines on whatever chart you're trading or investing in. It is a superpower, and we knew these support lines were important to gold, as are these resistance lines as well. Coming back to Bitcoin, if we see an enhancement in the major futures, we would anticipate that this 104,744 level will be taken out and Bitcoin will head towards the 109 level. Because there's a good positive CTKS gap, we could have positive structural overshoot, but these levels have high levels of sell liquidity, so we would anticipate some directional consolidation around this point. Creating a structured approach to your trading and investment is really important, and equipping you with predictive insights from a structural perspective is also very important. You can make each trade or investment very specifically planned, measured, and executed with a purpose, knowledge, and understanding of the markets. This will enhance your overall long-term success. In tomorrow's video, please give me a list of specific charts that you would like to see from this cheat sheet. There's basically just the charts inside the service. We can talk about the structural levels on those. I look forward to your comments and catching up with you again in the next video. Bye for now.